Hello, everyone. Welcome to my latest episode of our weekend series dedicated to price action based technical analysis. In this episode, we will be conducting an examination and follow up on the GBPUSD chart, which exhibited a range bound movement in last week's trading session, underscoring the prevailing uncertainties in this market. On Friday, the GBPUSD experienced an intraday rebound following a surprising shortfall in the US ISM Manufacturing PMI data. This unexpected development reignited risk appetite among market participants, fueled by fresh hopes for easing inflation that could potentially prompt rate cuts from the Federal Reserve. With a broader market risk appetite prevailing at this moment and no significant economic events from the United Kingdom to drive the pound sterling in the coming week, questions arise regarding the potential outcome for the pound sterling within the current market dynamics. As market participants anticipate the handful of US macroeconomic data for fresh impetus, this video will delve into analyzing the current market structure from both technical and fundamental perspective, utilizing our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to decode potential price movement in the coming week. Before we proceed, it is important to reiterate that this video is intended for educational purposes only and should not be considered financial advice. While our aim is to enhance your understanding of price action analysis, it's crucial to acknowledge the inherent risk associated with Forex trading. Exercise caution and consider seeking guidance from a qualified financial advisor before making any investment decisions. With these considerations in mind, let's delve into the detailed analysis. So today we are not going to be looking at the daily time frame. So our first point of contact will be on the 4 hours time frame, as the daily chart's structure remains consistent with our previous week's assessments. Please refer to the link in the description box below if you had missed the video for further details on how our previous video on this asset was. So right here on the 4 hours time frame, the first thing I did was to take into consideration the nature of price action in the last couple of weeks to strategically position ourselves for the next move. Now, looking at this structure in the last couple of weeks, the first thing you would observe here is the fact that price action has been bullish, and when we connect the series of higher lows here, we have a couple of ascending trend lines. I have a major one right here, and then I have another one right here, which is the light one you're seeing right below. But the fact is, price action has been very bullish in the last 2 weeks. Now, in addition to that ascending trend line, it is that range where price action has been confined within in the last 7 to 8 days. As you will see, price action has been confined within the 1.267 and the 1.262 area to further emphasize the prevailing uncertainty in this market. And you know how we use our ranges whenever we identify them on our chart. We exercise patience and wait for either price breaking out of the resistance line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, to help us guide our decisions for this week, I was able to identify a key level which will be serving as a major role in determining our course of action. So we have something at the 1.267, and you know how we use our key levels in this community. As long as price action remains below the key level, we obviously want to be looking out for patterns and structures that support the idea of selling, and we are not going to be buying unless price action breaks out of the key level. So I will be looking forward to price breaking out of the key level to give me my first buy position for the week, and a further breakout of the 1.267 will welcome more opportunities to maximize the potential of this bullish move. However, if price action continues to trade below this descending trend line, we will be looking out for selling opportunities, but I will prefer that price breaks down the demand zone here to welcome that selling idea. So I'm looking at the break of the 1.262 and a potential retest of structure to join that decline to the downside. So our center of focus for this week is going to be basically between the 1.267 and the 1.262, where depending on the direction of the breakout will give us an idea of where price action will be going for this week. So I encourage us all to mark out these levels, as we shall be using it as a reference point to guide our independent trading decisions. If you have found this content helpful and useful in making your independent trading decisions, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. So I will be seeing you all in the comment section on Monday after monitoring how participants in the market will react to the structure, after which I will be coming up with an idea of how we will be positioning ourselves for the new week. Do have a wonderful evening, everyone. Bye.